ProfessionalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Happy Monday morning. 9 o'clock here on the West Coast. Looks like we're starting relatively on time. Dog days of summer. Probably pretty quiet. I mean, past, I suppose, week or two, we've been seeing a whole bunch of down. So I wouldn't be surprised if we have maybe a few days of just sort of backfilling. You can see breadth indicator here has been going basically one directional now for, geez, a better part of a month. So it's been a bit of a slog here. I do think, though, that we've got a pretty big event coming up here the end of the week, the 18th. This will be the big monthly options expiry. And a lot of these stocks, of course, have been knocked down. So a lot of puts are probably in the money. People panic buying puts, trying to make money through their short proxy. And it would be very typical of Wall Street to maybe put a bit of a bid in the market and make sure a lot of those puts end up expiring worthless. So rinse and repeat, business as usual. So we did see the market sort of open up today, a bit weaker. But within about the first hour or so, we started to see a bit of firmness come in. And looks like the market's trying to rally a bit here, especially in the stock market. I'd also say too, Foresight members and regular viewers of this video broadcast, hopefully what you can see is the breadth here on the histogram basis, and sure, it's tinkering with the universe number. Technically, actually, right now it doesn't have any tags. It's just sort of floating out on its own. But he said he will go and put the tags for these things in over the next week or so. So that'll be reporting basically an average of everything that you see here. But breadth histogram, bullish percentage. You can see the country funds in the short term are heavily oversold, minus 90. Minus 70 on the medium term. So we're within probably a week or so of some sort of major cycle pivot here. Then also too, remember guys like Larry Williams were saying that the seasonal trough usually comes in about the middle of August for things like tech stocks. And lo and behold, here we are, 14th, I guess 15th would be exactly the middle of August. Well, maybe 15th and a half. So I wouldn't be surprised if actually heading into this August options expiry, we actually find some sort of pivot low, and then we actually get sort of like a lazy sort of slide into Labor Day weekend and back to the professionals coming back and playing in the marketplace. So actually in that environment, I think I had mentioned, and I don't think actually we had it in our newsletter yesterday, but I did tweet it out. Caitlin Long, who I consider probably a pretty good reference point as sort of like an insider in the banking industry that's relatively friendly to crypto. She had pointed out just recently that in the United States you only get so many. Actually, here I'm in another chat room. I should probably get out of there. Whoop. All right, now we're gone there. You only get so much credibility, and if you just keep pushing and pushing and pushing, at some point there will be sort of checks to your balances. And she's kind of pointed out here recently that it feels as though and of course, here goes Brian rants and all this crap. There are other countries in the world where they're not nearly as democratic as the United States and not nearly as balanced and sort of power to the people kind of idea, maybe power to the corporations, whatever your interpretation is. But the United States still has these checks and balances in place. And Mr. Biden acting a little bit despotic with his use of the SEC to try and squash this burgeoning industry, crypto. She's pointing out that, basically they've stepped on too many toes. And now you're starting to see the pendulum swing back the other direction. And you might actually even find that the SEC actually loses credibility. That turns out to be credible in this world, like I guess Mr. Musk, you got to wear a big fat wig. Mr. Getzler is completely bald, and so he has no credibility in this world. Arr, arr, arr. Anyway, I always find it funny that Alan there's poking fun at Bill Gates, and yet technically Alan's bald. He's just all lying to us with his wig. But anyway, it's here nor there. And I love just poking the hornet's nest. One of these days, I'm sure he's gonna bitch at me. You're off my platform. You've been deplatformed. Who knows? I did find it interesting actually that he gapped lower this morning. So he hasn't seen any reprieve. I mean, maybe the stock started to firm up here through the day. I haven't really been watching. Yeah, look at that. So he's actually gapping lower on the day. And this beautiful weekly outside downside key reversal signals just working away like a boss. Love to see that. And actually interesting to see Toyota Motor Company just put in a bearish engulfing bar. So that technically is bearish. And that's also a 3-bar fractal. So that's bearish. And that's off a weekly price chart. So I think this is less about Alan and what a wonderful person he is, and more about the simple fact that the auto industry looks like it's a little bit challenged right now. And actually, that would make a lot of sense because what I noticed, I'll just give you a little tease. Our key reversal signaling system spat up a big, fat, outside, downside, bearish engulfing pattern here on MBB ETF. There it is. Kaboom. And it's interesting that that happened at what I would consider a pretty darn important level here. And it's so important, it's so big, you actually have to go out to the weekly charts to see it. But you can see, anybody that's followed me over the years knows that this is what I call a BoT setup. It's basically a continuation pattern, AB equals CD. And it's interesting that I don't know whether we did it on the broiler chicken show or whether we did it on a daily brief. I can't remember. But I was showing you guys, let's see if I have it on here, that this interest rate situation is not calming down at all. I still think that the inflation deflation gauge that I like to use, the market-based proxy, is still pointing towards inflation. And then these are actual yields, and you can see the 10 years pushing up, trying to break to new highs here. And the mortgage market, it also is put in a very well-defined, you might even argue there's a bullish BoT forming just in this. These are yields. So this is the exact opposite. This is the actual mortgage-backed securities. This is the iShares mortgage-backed securities ETF. And this is the exact opposite image. So, and if you're relatively new to the market, yields go up and down. They're actually, the coupon is actually fixed on the bond. And the way that the yield changes is the underlying price of the bond relative to the coupon. So you can see yield wise, it looks like we're making higher highs and higher lows. And price wise, right, we're making lower highs and lower lows. And that looks like a very well-defined bearish BoT. So get ready, folks. You thought the excitement in the market was done with regard to bonds and interest rates. Nope. We're just getting started. So, and of course, we've been talking about this at length for quite a long period of time. The commercial real estate market in the United States of America, and really for the entire Western society for that matter, as the baby boomers are aging and basically the workforce is shrinking. And then, of course, you throw in manufactured sicknesses, and all that kind of, conspiracy stuff to undermine the old economy. Um, there's a day of reckoning coming. Like, these are mortgage-backed securities, and they are clearly breaking down. This is actually a really good example of, can we just listen to the market's message? Can you actually hear what the market is trying to tell us? And it's trying to tell us, oh, you kids better be careful. This could get a little ugly here. In fact, breaking the downtrend line, and now we even have market structure below trend lines. Uh-oh. This does not look good. So, from the trader's perspective, of course, we love volatility, and we love to get, beautiful, clean signals. And I got to say, this is such a fantastic sales pitch. Just got to find the darn page that it's on. I think it's this page. Such a beautiful sales pitch for our, weekly key reversals. There it is. iShares MBS coming in here. Daily key reversal breakdown. Absolutely love this platform. In fact, I was talking to the team yesterday. This is going to be a really easy sell. Bread signals, kicking ass. It's interesting that we had a buy signal breadthwise there on crypto, and I see crypto just won't break down here. So, I mean, that's just working perfectly. Key reversals killing it. You want another example? I remember I had showed you Tesla here. Probably the only problem is I think I got rid of it, which kind of sucks. But we had another beautiful key reversal on General Motors, and that stock just absolutely collapsed. Here it is here. I mean, look at that, just kaboom. So beautiful signal. And if anything, I even talked to you guys about this the other day as well, that what you really want to do is you want to short the crap. I mean, Mr. Wonderful over here, yes, the trade is working along, but not nearly as fast and not nearly as efficiently as this General Motors trade. I can't believe how quickly this just bang, 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 bang. Take your money, get the hell out. Just, that was remarkable. So I actually think that this is actually tied in with this, which is tied in with this, which all circles back, and it's all predicated on this chart and this conversation. If interest rates have to start going crazy again here to the upside, bond prices to the downside, then, ironically enough, years gone by, we actually used to joke that General Motors is actually not really an auto manufacturer. They're actually a bank, a finance company that has this funny little side business of making cars. And if the interest rate market is speaking to us the way that it is, it would make perfect sense why this chart looks the way that it does, and why this short trade signal fired so efficiently and so cleanly, because clearly people on the inside of General Motors know that there's some trouble brewing in the interest rate market. So that's kind of an interesting conversation for your Monday morning. I think, as we sort of said there a few minutes ago, it feels as though the market had opened up, and actually probably the best thing for us to do, and Brian to do for that matter, is demonstrator of best practices. What do we do every single day? Come in. I think it's a good idea on the weekends to actually do daily charts. And I think maybe for today's conversation here, just with the public, we'll review maybe on Mondays the daily charts and just see what they're trying to tell us. So first and foremost, in the gold market, gold is actually in free fall here. And it's kind of funny because all those guys are like, oh, buy all your gold and buy your silver and bury your head in the sand, and everything else is going to rat shit. And actually, I think they're completely wrong. And it looks to me like gold has cleanly broken this low here. This could actually turn into an absolute rout here in gold. And you can see we're in a very well-defined downward pointing channel. My hunch is this midpoint of the channel is probably your next support line. Notice that happens to be up against 4.669s, and it happens to be up against previous horizontal support and resistance levels. And that also is a 61.8 of our most recent rally range. So I wouldn't be surprised if there's some sort of pivot sort of halfway through this move. But ultimately, I'm actually looking for gold to head back down to about 1830 area. Yeah, that's gonna catch all those like Kawasaki guys completely off guard. And ironically enough, it's it's probably the exact opposite message that probably most of the public expects. So that's a bit surprising. Uh, and interestingly enough, when we have loaded up the charts this morning, of course, I always like to do sort of barometer reading. US dollar index, I think that's supposed to be one of the topics we're supposed to talk about here on Mondays. And this bullish bot just keeps rocking and rolling. So we just had move stop to a trailing level on this bot setup that should have had you going long at about 102.34 there. Move stop to scratch there at 102.91. Move stop to trailing. So you could do things like three high low method. Since the three high low method right now, its stop would be down here. I think you just keep your stop at scratch for the time being. And of course, if this thing does M out, we have come up against, it looks like some sort of downtrend line for previous structure. I don't know how far back this goes. Well, this looks like it's pretty important. Yeah, there you go. So off of the original market structure top, we're now coming into that trend line resistance. We probably are going to run into a bit of traffic up there. That wouldn't surprise me. Having said that, no sell signals here yet. And if anything, we were kind of thinking that this thing was going to top through this window here, and it just said, nope, sorry, I'm still a bull. So I wouldn't be in a big hurry to stand in front of that, and that's probably why your gold market looks as weak as it is. And even this A, B, C, D looks like she wants to get up. That's the bullish bot. Looks like the target there is about 104 and change. So we'll see what happens here. If we start to go into meltdown mode because of these mortgages, that's the last thing the public is even thinking about right now is another big wave of massive interest rate increases. But if we do, this would be sort of your risk off bet. Everybody's piling into the US dollar. If we go and look at things like the euro, right, that makes up 35% of this thing, we probably see a pretty bearish chart patterns up here. Yeah, actually, that's not too bad. It's nothing really to get too stressed about. Probably needs to find a top here. We probably have to rally back up and then M out. Right now, it just looks like it's pulling back against trend line support. So I don't know. I'm not really seeing it there. Actually, I think it's coming out of Asia. Because if I'm not mistaken, I think China has just basically gone into full meltdown mode. Yay! Assholes. Fucking commie dictators. So, if anything, it's good that China and the fucking con job of what's going on over there is finally being exposed. But the yen obviously is going to have a huge, if China goes into deflation, the whole fucking thing starts collapsing, then you're probably going to see side effects and things like the Japanese yen. And probably also two things like the Australian dollar. Be interesting to keep an eye on the Australian dollar. This is the way that I used to play Asia, is I would only play the markets that we could actually trust. Things like Australia, Japan, New Zealand, Korea, I suppose. Well, anyway, you get the point. And sure enough, there's big fat M staring us in the face on the weekly charts. And I think that's probably, because Australia is basically like the supermarket for commodities for Asia. So, they have tons and tons of iron ore and stuff. So if there's a lack of demand coming out of China for all that kind of stuff because the whole Fugazi is collapsing, you should see it in the Australian dollars price chart, and I think we are seeing it with that M. I think that's pretty clear. So yeah, I would say it's Asia that's driving the bus here, not Europe. I think Europe's kind of there on the sidelines right now, trying to scratch their head and figure out what the damage Russia's done to Europe, what the long-term repercussions are going to be, if there are going to be any. I don't know. Okay, so getting back to our conversation, like I said, daily gold looks pretty nasty. And the US dollar looks strong. Asian currencies look very weak. And I think you're probably going to see this coming fall. You might even find that this fall is actually exact mirror opposite of what happened in 2007 and 2008. So in that situation, it was the Americans and their debt problems and their housing market bubble bursting. And of course, all the credit markets started to fall apart and stuff. And the international markets, they didn't actually really suffer too much, and they actually did really well through all that. Like Canada, there is no reason whatsoever for there to be any sort of quote unquote quantitative easing in Canada. None whatsoever. And the hyperinflation bullshit fucking loser economy that we're in right now is because they did do that and they had no business doing that. It's very frustrating. Yeah, I know. I'm not done yet though. Man, that time sure went by quick, eh? Thank you for the heads up, Chris. So just I'll just quickly review these and then we'll call it a day here. There aren't any major econs out today, so that's another reason why I think there's just a bit of backfilling here today on the price charts, and also too, like I said, we've got the big options expiry coming up on Friday, so it doesn't really surprise me that they're putting a bid in the market. But you can see there's like no econs here out today for North America at all. You got senior loan officer survey here in Canada, and I'm sure it's like, oh shit, oh shit, oh shit, oh shit, oh shit. But I don't know whether you could, senior loan officers are allowed to say that publicly. Anyway. So you can see we don't actually really get any real econs here until we actually get into sort of the Tuesday session for Asia. And there's going to be a bunch of numbers being reported here tonight. But right now, not really much. So as a result, didn't really spend any time going over the econs and situation. In fact, you know, it's a slow news day when you pull up your economic report and the report is about India inflation rate. Now that's the definition of a slow news day. But notice here, look at Japan. Oh boy, I've always told you guys, right? Use Japan as sort of a leading indicator of what this sort of general tone of the market should be. So actually, I'll be surprised if the American market can actually close positively on the day. If they can, hats off to them. Anyway, okay, so just back to our daily review here. So as I said, the gold kind of heading lower. The crude oil, it's got a V top banged up against a 1.618 golden ratio number here, but that's about it. So I don't know whether I can really call that a top. You know, the bull ABCD that we were worried about, I told you months ago that David O, our Tuesday, stock pickers club meeting quarterback, had pointed out that he was looking for a move on crude back into the 80s. And sure enough, here we are. That's done now. So I'd actually be looking for some sort of top in here. And also, too, and not really that many people are paying attention to it anymore, but the story used to go that as we head into like August, the price of crude would get bid up because of the fear of hurricanes in the Gulf of Mexico and the oil services companies having to shut operations down. I don't know whether you guys remember a company called BP about 10, 15 years ago got into a lot of hot water over a big oil spill in the Gulf of Mexico. And it's interesting how since then we don't even really hear people talk about that anymore. Anyway, point of the matter here is VTOP should be tested, but at the same time too, I am actually looking for this to somehow top out here and start maybe correcting a little bit, but nothing to do. Again, it's Monday, sort of no man's landy. Looking at the stock market, I think basically the message was that we were kind of coming into support. I suppose, you know, here on this ES futures, next support line's all the way down here. And I wouldn't even be surprised. You can see 2.618s, candle body lows, horizontal support and resistance. Well, actually, it's a foggy level there. Horizontal support and resistance and the midpoint of the channel. Yeah, a little bit lower. So I wouldn't be surprised if maybe we even have, like, especially with all that Asian economic data coming out, overnight, I wouldn't be surprised if there's another push to the downside here midweek, and then mysteriously Thursday, Friday into that options expiry, all of a sudden the market starts to rally back mysteriously. So point here is you can see there is our recent top in the stock market. We now have pretty firm moving average resistance, and also to this uptrend channel. Now that uptrend line is actually going to act as resistance, and this downtrend channel, which I think is active, it also is going to act as resistance. And notice that's right up against these horizontal support and resistance levels, and it's also against the original market structure failure. So if I was looking for shorts, I want to be hunting against these highs, that trend line into the 30 SMA kind of idea. If I'm looking for longs, I want to be hunting against these lows, Foggenbaum, midpoint of the channel, and the horizontal support and resistance area down here. Right now, first thing Monday morning, I don't really think there's a heck of a lot for a guy like me to do. Then we'll finish off with ye old Bitcoin. Actually, that's not bad. It's actually under a half an hour here. So interestingly enough, Bitcoin futures actually has a double bottom working, right? We went down, we went up, we went down. We did not go through those lows. Then we turned around and we actually went up through these highs. So I did find that a bit interesting this morning. This futures chart, this is a high to low trend line drawn from the past, and quite remarkable how those high to low trend lines really define support and resistance. So I do believe that this is an extremely important level here. And as I had said just a moment ago, we actually do have a W in place here. And the W itself is actually projecting, oh, what a surprise. It's basically saying, hey, we want to take the market up and tag the top end of this megaphone up top here. So that was kind of interesting. I was a bit surprised to see that. You can see 30 SMA sort of acting as a ceiling right now. And in a weird sort of way, we're probably just stuck in a trading range here, just waiting for somebody to give permission for the market to bust out to the upside. We'll see how it goes. That would be my interpretation of price action off of the daily price charts. If I'm hunting trades, clearly shorting against the highs here, 30 SMA, horizontal support and resistance. I think candle body highs, that makes sense to me. And then same sort of thing on the flip side. 50% level against these tails, candle body lows for trade location. I could be hunting lows against this level here. Right now, it's kind of just middle of the range. And so, again, very typical Monday, not really doing anything huge here. So it's nice to see through the morning, Bitcoin and a lot of the cryptos themselves actually started putting in pretty solid bottoms. Did notice through the evening, I'm not quite sure what drove this. I mean, was it Ethereum? I don't think so, because you can see something happened here that caused the Bitcoin dominance to absolutely puke out. And at the same time, you can see the total crypto market just jumped here. It wasn't Ethereum. It wasn't Litecoin. I'm not quite sure what caused this. And actually, Eddie, you're pretty good at, and Nick, and probably all of you TRIers. Do any of you guys know what it was that caused that dominance chart to freak out there and the total market cap to freak out? Anyone? Anyone feel free to add something to the equation here? How about over on YouTube? Juan John says SEC already lost credibility. Yeah, that was that comment from the beginning. I tell you, if you're a bald guy in this world, you can't buy a break, eh? You better go and get yourself a toupee, like a certain automobile manufacturer and space vehicle manufacturer. Eddie said, BitConnect? Is that what it was? BitConnect! BitConnect is back! Woo! I don't know. Anyway, something to look forward to here through the day. Maybe we'll talk a little bit more about this in the after party, but something's going on here. And I suppose just to finish off the conversation, a little bit of a tease. Sushi? Yeah, good looking little breakout there. And actually seeing a bit of green on the crypto screen. I think I told you that ironically enough, our algo has been long. Where's the algo signal? Yeah, from way over here. So it just basically did absolutely nothing through all of this. I gotta hand it to this algo. Pretty damn impressive. And the remember this was the DFF top here. Now you can see that trade has just basically come back to scratch now. Is this a new bull? I don't know. Uh, we did break to new lows yesterday, and should you have maybe been taking a bit of profits on this move? I don't know. I think we still had the target here at 2.618. But big spike. And I think this was sort of when I took Liam out yesterday. I mean, just an absolute mess. The market was trying to point higher, and it probably goaded in a lot of crypto kids into getting bullish. Then the market completely puked out, and we were just totally tanking. And then just out of nowhere, the market just pivots. And if anything, this is a fantastic analogy of, remember, I was kind of showing you guys that, like on the weekly chart, this is a horrible trade location. This is just mess. We're not near the bottom end of the range, so you can't go bargain hunting. We're not near the top end of the range, so you can't go like sniping shorts. We're in like no man's land. And if anything, in no man's land, the little guy just gets chewed up. Um, and I think that's exactly what these kind of images are. And I think I showed you, like off the daily chart, we're stuck in this channel. And frankly speaking, I don't know who's going to win this battle. It looks like the Bulls got the ball now, but at the same time, too, we got one low, we got two lows. Is that a third key low? Maybe. If we actually start moving up through these highs, remember I told you the futures markets actually has um, double bottom working here, right? There's the futures chart. So down, up, down, breakout. I mean, I suppose, actually, this is something I would do for Nebraska and Hogue and Eddie and all them a million years ago. If I understand correctly, I think they're actually trading the futures over there on Top Step now. So I should probably go over to the Top Step guys and go, hey, if anybody's trading beach balls, looks like we got a bullish bot here trying to form. That's what Mr. Hoagland affectionately calls Bitcoin. So fascinating how this double bottom is actually alive. It's in there. And there's your bot entry level. And whoa, look at that. Wow. Now there's an image to finish off this video. What do we call it when you have big fat fog and bomb bifurcation levels line up perfectly with AB equals CD harmonic PRZs? There's a word for it, I'm thinking, and it starts with C. Let's see if any of you can post in the comments of this video what word it is Brian's thinking. Starts with a C, and it is the trader's special technical analyst wet dream. Ugh. Wow, that's interesting. Look at that. So there you go. There's an image to end the video on. Boom, 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 boom. Let's go back to my room. So let's get a move up through this 3,200 area. And how do the kids say? LFG, right? 3,200 and LFG. All right. I'll leave the video at that for today. Should be interesting to see how all that Asian econs play out this evening. But if you are a trader, I'd pay attention. And I had sort of made reference to this recently. A trader's wet dream is a nice consolidation, because the consolidation will resolve and it will produce a trade idea. So we are consolidating. This is forming a very interesting trading range. And when we break out of it, if we're really lucky, you might see that a fairly substantial move starts to materialize on the other side of that. So take a screenshot of that. That's actually really good, usable information right there. All right, everyone. Have yourselves a great rest of your day. PMA for the win. Let's head on over and hang out in the after party for a bit. We do have a question from the Broiler Chicken Show yesterday that I wanted to address. We should probably circle around and take a look at the key reversal signal that I showed you on the mortgage-backed securities, which is a very, very bad sign for bond prices and rising interest rates. It ain't over yet, folks. And interesting too, I think you guys got a really good lesson on how I think half of the reason why these auto manufacturers are starting to break down here on the charts. We see it in General Motors, we see it in Toyota Motor Company, and we see it in Allen Nice to Pay. Um, um, so I don't necessarily think it's actually just specifically Tesla. I think that's actually a vote on the entire market and sort of the ability for the consumer to continually absorb higher interest rates, and the auto manufacturers being able to continually sell cars in that face, which I don't think they can. All right. Have yourselves a great day. PMA for the win. All the best. Hugs and kisses. And bye for now.